Hi, I'm Mark Lonecker. I'm the president of Liberty Coin and Precious Metals in San Diego, California. And we're here at the California Resource Investment Conference in Indian Wells, California. And we're delighted to have David Morgan here as our guest today. David, pleasure.
Thank you.
And there's a lot of things getting ready to happen, I think, in the silver market, as you probably agree. We've had a really good move here so far in 2012 off the December low. I've got a lot of questions I want to ask you, but I think the first one will be, where do you see the silver market going here this year, 2012?
Well, it's higher. Mm-hmm. I see, I've told, in the public and also my members that buy it anytime it gets under 30. We had roughly a 1 month opportunity to do that. Right. Now we're doing the interview roughly at 34. Silver's up 20% for 1 month already. Mm-hmm. I think we're going to get a wide trading range. I mean, the nominal high is around 48, which was established about May 1st, 2011. So to get back to that point, we still have a lot of overhead resistance. I think we're going to get through that barrier into the 40s, probably September, October timeframe. Mm-hmm. And I'm looking for actually new nominal highs, probably about 50 by the end of the year 2012. So I'm roughly saying that we're going to probably get a double out of silver, but it's going to take about a year. Start the year under 30 and make it to, let's say, 50 or 60 by the end of the year. That's my best guess now. I do reserve the right to change my mind. I mean, these long-term calls are tough,
right.
And if the market changes, I'm going to change my opinion. But right now, that's the way I see it.
We mentioned the end of the year, and we were talking off camera. One of the questions I'm dying to ask you is, how do you see the elections this year in the U.S. affecting all commodities in general and the dollar?
I'm apolitical, political agnostic, but you can't get around it. I really don't think it matters too much who gets into office. I think it's changing captains on the Titanic.
Right.
I think there's so many structural problems within the economy and within the entitlement programs that it really can't be cut, that you're going to not see a big sea change. Now, on a very small or short-term basis, perception is everything. So if all of a sudden it looks like a certain candidate is going to win, you might see a shift in the gold price that's fairly significant based on perception, but in the long haul, I don't think it's going to have a huge effect. The only caveat to that, of course, is Ron Paul.
Right.
If someone came in and really made some fiscal changes and really went back to the lesser government than what we currently have, where it keeps compounding at an exponential rate, and took charge, then I would think you would see some significant move in the gold price, but I don't see that really happening.
Sure. In regards to silver, when do you think we'll actually have true price discovery in the physical market? Do you think we'll have a delivery issue with the COMEX anytime in the next couple of years?
I've said from the beginning, I wrote an article for FinancialSense.com way back in the beginning called Price Manipulation in the Silver Market.
I read that one.
And I said, and what I said then holds true today, that the price discovery for silver and other commodities is based primarily on the amount of paper flying around. And that works for a very long time, but it doesn't work forever. And at some point, that no one knows exactly when, the physical market will take place. We've already seen that take place during the financial crisis in 2008, where there really was a shortage of retail silver product.
Right.
And there was a huge gap between what the commercial bars sold for and what the retail products sold for. So that was a price discovery in a free market. And it was around a 25% premium to the actual paper price of silver. I think that it's probably within a couple of years. I don't know if it'll come off the COMEX. I don't know if it'll come off the LBMA. I don't know if it'll come off from a hedge fund not getting their silver in time. I don't know exactly where it's going to come from, or maybe even a silver user. Maybe one of the Silver Users Association members doesn't get their silver in time.
Right.
But sooner or later, the physical market will dictate what the true price is. That will be the point when we'll find true price mechanisms working. The problem with that is once that happens, they tend to overshoot. You might get a spike, and then the market will quell down. Right. But we're at the edge of that right now, I believe. I gave a speech in London in February of last year, it's about a year ago. And at that time, I said I'd never seen the physical silver supply as tight as I see it right now.
Right.
And my exact words were that for all practical purposes, every silver bar that's a commercial bar is held as an investment right now, and all new bars are going in the industry.
Right.
Well, since that time till now, so we're looking back a year now, the amount of commercial bars actually dipped down, and now it's back up to where it was previously. So what that suggests is that there was some offtake in commercial bars from the investment side into whatever, other investors that don't report, or commercial activity or whatever. Point being this, it's still a very tight market. There's still a lot of underlying fundamentals that are very beneficial for silver, even in a recessionary time frame. I'm still long-term bullish, but again, to know when it's going to break free, hard to say. And one other point, the CFTC looking into the silver market. Ted Butler just put out an article, I forget the name of it, but Enough is Enough, I think was the title. Right. And look, he's right. I mean, 3.5 years, how much time do you need? I mean, this thing is not very difficult to determine, and yet they keep stalling and stalling and stalling. The market eventually takes care of that problem. As I've said before, the market at some point will go to the physical only, because you cannot make a piece of paper a true substitute for physical silver.
Well, and ourselves as bullion dealers, we've seen the demand just in the last year from the public. It's extraordinary. Not just from the guys who are buying 10 or 20 ounces of silver, but for instance, yesterday we had a gentleman buy $500,000 of silver in our San Diego location. So we've seen the demand continue to increase, especially on this most recent price dip. The buyers came out in droves like you said, when it dipped under $30. So from what I've read, there's only maybe 1% of the people invested in gold and silver.
Yeah, that's a hard one to get a handle on, but I think that's true. I've ran the math myself. It kind of makes sense. The number that I got was 1%. Again, no one really knows. Back in the last bull market, Blanchard Company had a huge presence in the bullion market, and I asked them, what did they think? And their data showed they felt it's about 1%.
Right.
Now, I count a silver investor as someone that's put in $1,000 or more into the market.
Sure.
I mean, if you got a couple of silver rounds or a couple of silver eagles from your grandmother for your birthday, that's not a silver investor in my view. But $1,000, there's got to be a cutoff. There's got to be, and that's what I've determined. That's,
right.
$1,000 isn't a lot of money, but it's enough, I think, that would make you an investor. And so if you take that criteria, I would say 1% is probably about right. So all we need is, to double that.
I was going to say, what happens when 2% of the people get into it? Then what happens to silver?
Yeah, well, then it goes. Yeah. It really goes.
And is there enough silver out there for even 2% of the people to be in the market?
Well, price is the arbitrator for supply and demand,
right.
So the price will just go much higher. And there'll be somebody that says, I bought my silver at 5, and now it's at 80, and I want to pay off my house and buy that boat I've always had my eye on. Right. So they'll sell, and the new buyer's going to buy it thinking that it's going to go to 160, and maybe it does. So. Yeah, I mean, those are individual choices, but I don't think the true value or the fair paper price of silver is even close to where it should be right now. I mean, we're 35, like we're 34, so I think we go about 5-fold from here to be at probably par to where it was in 1980. And in 1980, we had significant problems, but they're probably 1/10 as bad as they are now. And that's the real caveat, because silver has every attribute that gold has, and it's easier to obtain as far as affordability. It's not easier to obtain as far as the amount, walking to the coin shop. I've got, a lot of feedback from the other side of the Atlantic talking about it's easy to get gold, but it's very difficult to get silver in Europe.
It is interesting.
So, yeah.
We've you mentioned, this is 2012. It's an election year. We're in San Diego, which is an enormous military town, obviously. We have a lot of customers in the military right now, and we're hearing all kinds of unusual things that, in regards to Iran, where they think that there will actually be some sort of a shooting war with Iran by September or October. And we're hearing this from some customers who are fairly happy in the military. What would happen to the commodities market, and gold and silver specifically, if a shooting war did start?
I think it'd increase the price. I mean, it's a safe refuge known worldwide. And so people will want to, put funds into it to secure their wealth and protect it. And I see it only as bullish. So if that were to happen, I think it would be a boost to the metals markets.
We have a lot of customers that have asked us recently if we had some sort of violent correction in the stock market, for which there's numerous reasons to cause it, what would that initially do to the metals? I'm assuming there'd be some sort of a dip, but it probably wouldn't be very long lasting. So if we had a correction of, let's say, maybe 25% in the stock market, what would that do to the metals in your opinion? We've seen it before.
Yeah. Well, my opinion is pretty strong on this, and at some point I'll be wrong, but there's so much leverage in the metals in all markets, really.
Right.
And most of it's on paper, as we just discussed. So if that were to happen, I think you'd see a pretty significant drop in the gold price because, again, most of the gold that's owned by large entities like hedge funds, money managers, banks, they have it on paper, and so they'll sell it on paper and they'll go right along with the stock market, so we'll sympathize with it. Usually after that washout occurs, it's one of the first to recover.
Right.
It really doesn't change any of the fundamentals, but it does affect the price because the price is still paper determined.
And a great time for your customers to get in under $30 again, right?
Right.
But I know you're speaking here pretty soon. I just have one more question. But for the newer investor who's maybe just now looking at we on every price run up, obviously it catches more people's attention. So for the newer customers out there, what would be your best advice for them right now?
Brand new customers or new into the market?
New into the market, just kind of discovering silver, gold.
Well, my first thing would say become educated. Don't take my word for anything. Get on the internet and discover, the history of money. Find out the problems that exist. Make your own determination if it suits your investment profile or not. I think it suits everybody's investment profile.
Right.
Also, I would recommend starting with what's called constitutional silver, 1964 or older U.S. coinage. You can buy a half bag, which is 500 face value, or a full bag, 1,000 face. A full bag now is what, 26,000, 28,000,
right.
Something like that. So that shows you the deterioration of the currency. I mean, I'm old enough to know when I was a 10-year-old kid, $1,000 was $1,000 face silver, and it wasn't anything but that.
Right.
So now that same bag is worth 28,000 of these pieces of paper. Well, how does that happen?
Yeah.
Which dollar's a dollar?
Well, or it's like Ron Paul says, in 1964, a quarter bought a gallon of gas. Today, a quarter buys a gallon of gas.
Yeah, that's right, silver quarter. Not a slug like we have now. But
Those don't even make the right noise anymore. I don't even use them for ball markers on the golf course anymore. I use a silver dollar.
Okay.
But anyway, I really appreciate you taking the time here at the conference to join us. And again, I'm Mark Lonecker with Liberty Coin and Precious Metals with David Morgan, and we really appreciate you taking the time to.
My pleasure. Thank you.
All right. Thanks a lot.
All right.
Have a good show.